In this video, we're going to talk about Ideanomics. If you're considering buying Ideanomics shares in your portfolio, then please keep watching this video until the end, because it covers many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $3.25 and closed at $3.14. The lowest point at which it fell to was $3.07, and the highest point it rose to has been $3.25. Compared to the current price action, its 52-week low was 80 cents, and the 52-week high was $5.53. The current trading volume of Ideanomics is 15 million shares, compared to the average volume of 20.7 million shares. Overall, the volume of Ideanomics shows that the stock is currently recovering from a sell-off from the past few months, and the market is currently standing on the sideways to see if there will be more positive signals coming from the stock. Over the next few weeks, if the stock manages to hold its current gains, then I expect more trading volume coming our way. Now, let's take a look at the enterprise value of the company, which represents how much the company's assets are worth once the debt is paid off. The enterprise value of Ideanomics rose significantly over the course of 1 year, from just $371 million in Q2 of 2020 to $1.08 billion in the present day. Keep in mind that the value of the enterprise in this case is mostly based on the assets of Ideanomics, which does make sense since it purchased multiple companies over the years via corporate acquisitions. This is why overall, Ideanomics as a holding company of many pieces is worth more than before. Another outside signal to observe is the total number of shares outstanding. Generally speaking, if the number of shares keeps increasing, then it suggests that a company is selling the equity to keep the ship afloat. In terms of the common shares, the amount of shares increased from 237 million shares in Q2 of 2020 to 426 million shares in the present day. The evolution of the number of shares outstanding is quite standard for this kind of company, since it has to raise capital to plug the gap caused by the operating losses. This gap may be reducing as the operations pick up, assuming Ideanomics decides to keep the operations as we go forward. Overall, the trend of Ideanomics is a positive one for the short-term trend as far as investors are concerned. The sell-off from the past few months seems to be behind us, and the market is willing to give it a second chance. Just note that the long-term price trend of Ideanomics so far is one of momentary peaks before heavy corrections back. This is caused by the history of the company so far, which has been developed by acquiring different corporations that correspond to the current market trends. This is why I believe that the company is good for short-term trading and pocketing quick gains, but if your goal is to hold the company for the long-term growth, I would advise more caution. The company has to demonstrate its willingness to stick with its current operations for me to comfortably suggest holding it long-term. For the time being, we can start buying the shares with the time horizon of 4 to 6 weeks before selling it. From the price actions patterns, we may be able to get a glimpse of whether the stock still has enough steam to go upward. Meanwhile, the financial market's overall sentiment is still reluctant at putting more money into innovative and growth stocks. We're now over the stock craze of 2020, and most investors decided to pull back massively from the entire disruptive, innovative growth stocks, covering biotechs, electric vehicles, and anything requiring keynote presentations to raise capital. Going forward, the focus of the market will get back to the financial stability, longevity of the company, and whether the company has solid financial outlooks. In other words, the blue chips have once again taken over the startups as the go-to investments for money managers. In the current circumstances, the recommended approach is to be careful when buying the stocks. On one hand, the stock may be able to climb back on its own when operations begin to carry the stock price. On the other, the stock may simply increase because it fell low enough. This means that in the current market settings, we need to tread the water carefully regarding buying stocks. Many of them have become overpriced over the past 12 months, and we need to wait for another few weeks or months before the timing may be right to actually increase our holdings. With that being said, it is clear that many stocks are now recovering from the sell-off earlier this year, and I believe that the current timing is good to target those that have been oversold over the past few months to make rapid gains, such as for Ideanomics. Of course, there will always be sudden events that will create a lot of volatility for individual companies, and this is why I always recommend to hold a small position in those stocks in case you fear missing out. Thanks for watching. If you like my content, please like, comment, and subscribe to my channel.